Next, we have Chetan Thacker, the Senior Vice President, Portfolio Manager too from ASK Investment Managers. Morning there.
Morning, Nikki.
All right, I'm going to start off by first getting a basic perspective of what do you think should one be a little more cautious at this level in the run-up to important events, or you think it's a market where the first half is expected to be decent enough, a good gains coming in for the markets, and the second half could be lackluster? What is your key assessment for 2024?
So for 2024, our sense is that as we move along, you will probably see more traction in earnings growth. That will start to happen. And over there, what we believe is domestic is expected to pick up in terms of volume. I think Q3 will probably show that certain pockets on the discretionary side have started to accelerate as far as volume growth is concerned. But the recovery has been a bit patchy. So our sense is as we move ahead into the calendar year 24 and fiscal year 25, you will see domestic also gaining steam. Apart from that, I think exports has been a weaker patch this fiscal. So the assessment there is as we move ahead into the next year, you start to get growth coming in from exports as well. So overall, as we inch ahead, our sense is volume growth continues to pick up steam from here on. And in the very near term, obviously, the market will respond to the earnings that are likely to flow through in the third quarter. We have a key event that is placed in May of this year. But earnings recovery is expected to happen through fiscal 25.
Sure. I want to chat about what do you make out of typically the IT theme. I'm sure you have a bunch of themes that you've mentioned in a big report that you've laid out for the year 2024, and we are going to get on to that in just a jiffy. But before that, I'd want to chat about the entire IT pack. December quarter is technically a weak quarter, which is essentially marred by the holiday seasons that we see in North America and other globe. Of course, what do you make out of both the TCS and Infosys will be reporting in the numbers? Within the IT basket, which counter you think would be a big disappoint or a drag, and which particular company you think would be a bit of a surprise in terms of the earning bits?
So clearly the large cap IT names will see subdued performance. Like you highlighted, this is seasonally a weak quarter. Apart from that, what we've essentially seen is that the nature of the deals have also shifted over the course of the last particular year. So the assessment is constant currency growth there will remain muted in Q3. Having said that, I think there are pockets which should do well, particularly on the ER&D side. Our assessment is anything which is exposed to auto, because that is where we are seeing a great degree of transition on the energy side. So there our assessment is growth will continue to remain strong, even on the constant currency growth basis for this quarter. So there will be these select pockets where our sense is growth will remain higher, ER&D being one of them, and certain few select mid-cap names. But per se, as a pack, our assessment is revenue growth will be muted. You'll also see some degree of impact of wage revision in certain names. So that will essentially mean that margins also will have some degree of cap as far as expansion is concerned. So per se, as a pack as a whole, pockets of positivity, but overall you will still continue to see subdued numbers.
All right. Apart from that, of course, let's chat in about the themes that you're pretty bullish on in 2024, manufacturing being one of it, of course, and financials being also the one that we need to talk about. But typically in the pecking order, the themes that you'd like and why?
Yes, so like you rightly pointed out, we've got that out on the report that we've released. Manufacturing is clearly one theme which we believe is here to stay for a longer period of time. And there are a couple of reasons why we strongly believe that manufacturing will continue to gain traction. What we are witnessing right now clearly is an acceleration in growth driven by the reforms that the current government has undertaken over the course of last 6 to 7 years. That has essentially fairly and squarely put manufacturing at the centerpiece. What it has essentially also done, given the geopolitical environment, is that it has made India a very attractive destination as far as shift in global supply chains are concerned. So we are actually witnessing a strong tailwind. Our expectation is, given the large size of the Indian market with 1.4 billion population size, and the fact that we are essentially seeing a rejig in global supply chains, the opportunity is there for the country to just grab it with both hands. and deliver as far as acceleration is concerned. We've also seen a fair degree of policy support by way of PLI or be it the lower corporate tax for newly registered manufacturing entities. I think that clearly will provide support to the industry to build economies of scale over a period of time so that they can compete globally as well and emerge as a destination as far as manufacturing is concerned. So clearly, that is one pocket where we believe earnings tailwind will remain higher for a longer period of time. The second bit is on consumption. In consumption, our assessment is the discretionary bit of consumption will do well over the more medium to longer term because as the country gets richer, you will essentially see consumption patterns changing. And discretionary bit of consumption is where you have story of both penetration-led growth and premiumization that will play out. So our sense is in consumption, we would prefer consumer discretionary names where we expect growth to remain higher for a longer period of time. On financials, very clearly, our sense is as the country obviously gets richer, leverage is lower in the system. You will see leverage increasing there. That in turn will mean that earnings growth will follow there. The key factor always to keep in mind on financials is to get the metric right as far as the underwriting capability of entities is concerned. The opportunity size is large. As a country, the leverage remains lower. So as we grow in size, the expectation is earnings growth and loan growth will start to inch higher, but we need to be focused on names where underwriting capabilities.
Sure. Apart from that, I'd also want to chat about financials per se. That's the particularly packed, which is a lot of hopes are perhaps building in on the fact that private sector banks this time around would be able to outperform given the lackluster performance that we've seen in the previous year as compared to the PSUs. With respect to that, if you just check the valuations, I'm sure you would agree that private sector banks, despite the underperformance, still kind of command a very premium valuation as compared to their own historical averages. Within the space of PSU and private banks, what do you like? And also, if you could name out few picks within the large cap bets, if you have any in your mind.
So you won't be able to give any stock
Sure.
specific information there, but overall in general, our sense is what we witnessed last year, particularly on the PSU side, is the fact that we saw a faster normalization of ROEs. And that is why we saw the kind of performance that we've seen on PSUs and we've seen normalization of ROEs there. As we look ahead, I think irrespective of whether it's the private or the public sector, the focus will clearly shift on ability and capability to drive growth for a more medium to long term perspective, an entity which can deliver that, keeping the underwriting discipline in place. Our sense is those names will continue to do well, and it's not necessarily one against the other, but anyone who shows these characteristics will continue to do well. Yes, on the private side, I think their valuations were higher compared to the public sector, and hence we've seen a sharper up move on the PSUs as the ROEs have normalized. From here on, the equation will clearly shift back to how growth gets delivered from a more medium term perspective.
Sure. Apart from that, any other theme per se that looks interesting to you?
So I think broadly our assessment is that manufacturing is clearly a theme. Manufacturing itself encompasses a lot of things. Even within capital goods, our sense is as capex continues to happen, as the government continues to build infrastructure in the country, we've seen a rapid pace of implementation over the last 7 to 8 years. We still have a long way to go. So anything which is linked to that will continue to do well. Anything which supplies to the capex directly or indirectly will continue to do well. Consumer discretionary should do well, and financial should do well.
Okay. This is going to be a little more from the shorter perspective. And, still for the benefit of viewers, I'd want to ask, one is Gujarat, vibrant Gujarat theme. And of course, the second one is the Ayodhya. They are big events essentially which we are looking at. And there is a lot of investment theme per se which is circulating around that. You've seen some event management companies like that of Privek also doing exceptionally well. In light of that, what do you think are the sectors or the themes that really one needs to eye in the run-up to the key events?
So I think Vibrant Gujarat is an event that was very successfully launched by our current Prime Minister. We've seen kind of commitments that are coming in. Our expectation is, given how we expect manufacturing to play out, you will see a lot more of these investments happen across a lot of industries. The focus clearly is on getting backward integrated across a lot of crucial industries. That means that capex intensity will remain high, and Vibrant Gujarat is a clear example of how things are likely to shape up as we move ahead into the future. As far as the Ayodhya event is concerned, I think if we just zoom out a bit, very clearly, what has happened is a lot of these crucial places have become a tourism destination. And our sense is that is another pocket that should do well as the country grows richer. Tourism will do well over a period of time, and there will be themes that can be played there.
All right. The last question that I have for you is a little broad based in nature. Essentially, 5 things that you think can lead to momentum for the markets, at least in the first half, and of course, your wall of worries for a market like this.
So I think on the domestic side, clearly monsoons have been a spoil sport thus far. That has an implication as far as food inflation is concerned. So we are keeping a close eye there because that is something that can put pressure on consumer price inflation in the very short term. Keeping fingers crossed that next year we have a better monsoon year, so that takes care of this particular worry. Second bit clearly is what we are witnessing on the global side in terms of the geopolitical tension. For us as a country, clearly energy is one sector that gets impacted whenever there are such kind of shocks that play out in the system. What we are currently witnessing, particularly on the key shipping routes, that means that freight cost can also turn out to be a near-term worry in an environment where exports continue to remain weak and the demand there is still weak. So that is another added set of worry as far as the global events are concerned. So we are keeping a close eye there to see how inflation behaves in the very near term. If we see a positive side playing out there next year, our expectation is there is a fair degree of pent up in the system. So suddenly that worry becomes a tailwind as far as growth is concerned. Similarly, on the geopolitical side, just monitoring things and events as they are happening.
All right, that was a pretty summed up and sharp response there, but we're just going to leave it at that. And thank you so much, Chetan, for taking out the time and having this conversation with us.
Sure, thank you. My pleasure. Thanks so much.
All right, let's actually also